Hello guys and welcome back. Today I want to go over the McClellan Oscillator, and this is just a general representation of the market. What this really helps me to do is to illustrate, it illustrates what the market is doing. So when you hear the Dow is down negative 200 points, that really doesn't mean anything unless you can illustrate in some kind of form. And that's what the McClellan Oscillator does for me. I can go and reference this and see really where the market, where it has been, where it's going, and kind of make up to some market decisions on what I want to do. So you can see it's been pegging the market pretty well. Up here in this area, we had the European problems, the Paris bombing, and the Russian jet that was shot down. The market got spooked, and it started declining from there. And of course, the Fed just recently reported, and up until that time, the commodities were really dropping out. Oil was really selling off, and the market was just scary conditions down here. And of course, just referencing to another point, in late August, the flash crash with the markets concerned with Asia was at this point. We came way down, negative 245 on this McClellan Oscillator. So when we came down to, when we started testing the negative 200 range down here, I knew it was a fairly steep oversold market conditions in this area. So when it comes down, you might want to start getting interested in the negative 150 area, start building a position there, and when it comes down to negative 200, you may really want to start backing up the truck and getting as many contracts as you would like. So the McClellan Oscillator just really illustrates what the market's doing. That's really how it helps me. So what is the McClellan Oscillator? Well, it measures the advances and declines in the current market compared to the previous market's closing price. So, for example, the index or stock is considered advancing when it is trading at a higher price than the previous closing price. So, for example, on this day here, this was the day after the Fed reported, and of course the market liked what the Fed reported. So these prices were higher, or were going at a higher rate than the previous closing session. So this is an advancing day, and then so was the next. So how can we use this data from the McClellan Oscillator? How I use it is via SPY contracts. And once again, on freestockcharts.com, just type in SPY. You'll come to that chart, the SPY chart, and I just have this generally marked up, with technical analysis and everything. As you can see, we're kind of in a descending channel right now. So what I've done was, in the past, I started buying around here, and then the next day was up, so I got out with minimal profits, and then I actually waited too long. Of course, this would be the best day to buy, and I bought within this day, and the next day was up, so I quickly got out of those contracts. But I'm jumping ahead on myself here. So the SPY is a fund or a group of stocks that closely correspond to the price of the S&P 500 index. So if you were to trade the S&P 500 index, that would become very expensive. And the SPY ETF, or electronically traded fund, is much more cheaper compared to the trading contracts on the SPY index, or the S&P 500 index. I'm sorry. So it's just a cheaper way of doing it. But referencing the T2106, which is the McClellan Oscillator, you can see at what time is the best time to be doing that. And something I didn't explain was, you know, I marked these up at 200 and well, 200 positive, negative, and negative, positive 150, just to indicate, you know, the levels of interest that I'm looking at. In the middle, it's kind of, you know, if you want to play it, that's fine, but you have the best odds when it's at the extremes, and that's the way I like to play it. But this was an explanation of the McClellan Oscillator and how you can use it for general market conditions. Thank you very much.